Hello and welcome to the Expert Exchange. Joining me is Brianne, Gardner, Wealth Manager and Financial Advisor with Velocity Investment Partners at Raymond James. We're going to review her 2024 outlook and get a gauge on what's on her watch list and picks for 2025. Now, Brianne, first of all, thank you so much for being here.
Yeah, thanks for having me.
Now, this is going to be kind of fun because we get to go over some stuff that, from the year and have a little bit of a look. Now, last year we sat down with Richard Carlton from the CSE and we looked forward into 2024. You stated that it's a stock picker's environment for 2024 and you were positioning overweight defensively in healthcare, communications, and utilities. How did that strategy play out?
Yeah, I think the first half of the year, we did see concentration with the Magnificent Seven carrying the market. And then we started to see the second half of the year that broadening out. And really, that's where those sectors started to pick up a little bit, right? Especially utilities and some of the defensive names. So we did have exposure. And I think this is really important why you do create diversified portfolios, to have exposure to certain sectors. So if something's not working, then you can still benefit from being in those sectors as well and making sure that you are participating in leadership. So I think 2024 was a year of rotating, being active, and a little bit agile. And I do see that 2025 is going to be a similar year. I think it's going to be the great pivot, as I like to say. So being able to shift in and out of sectors, but we are still optimistic, especially on the U.S. stock market throughout 2025.
Now, in April, we discussed Amazon, and again later in the year. Now, you were you were a go on Amazon, ranking it an 8 out of 10 with a price target of about 221 US per share. What are your thoughts about that?
Yeah, Amazon's still a stock that we hold in the portfolio. We still like Amazon, and I do see more upside from Amazon from here. They continue to be a powerhouse across the board. I think too, Black Friday, Cyber Monday, headed into the holidays and Christmas holidays. You just continue to see more and more packages. Amazon Web Services, they also just got a big contract with the U.S. Army. So they have a diversified business model, and I think they're going to continue to be a leader, even in the AI space. So, Amazon is a stock we continue to hold, still ranks an 8 out of 10 fundamentally for us. We do see more upside from here in the stock. You see about 45 analysts on the street ranking it a buy, and about 14% price target upside from here. So looking at kind of around that $235 per share.
Now, you mentioned that if Trump comes into office, that is a bullish reason to own Amazon. Well, we are now here. Do you still feel that way?
Yeah, I think with Trump coming in office, he's a big believer on cutting corporate taxes. And for us, large conglomerate and large companies like Amazon will benefit from that corporate tax cut. It just increases their bottom line when they don't have to pay as much taxes, keeping more profitability for these large cap U.S. companies. So we have started tilting the portfolio more to overweight U.S., knowing that they will have more disposable income to reinvest into their business models, increasing their bottom line, increasing their earnings, and increasing their profitability, ultimately increasing their stock price.
All right, now how about Apple? Your price target was around 195 US. It's now at 235. What's your forecast projection in that space?
Yeah, I think Apple's ecosystem really does continue to deliver, unparalleled value. We see they've done seamless integration of hardware, software, services, again, driving customer loyalty and long-term revenue stability. So even despite global economic uncertainties, Apple's ability to generate stable free cash flow and really execute an aggressive capital allocation strategy does support our new price target of $245. I think they have great services like advertising, gaming bundles, and they're just set to expand further. So they do have a great pipeline innovation spanning from AI as well, foldable devices, computing, healthcare, and now shifting towards, again, hardware as a service. So reinforcing its position as a pioneer in technology. So still a stock we like and continue to hold through 2025.
All right, and we discussed Lululemon a couple of times last in August, and you like their long-term growth from product growth and international expansion. I think the price target was set for about 400 US per share. Right now, they're around 322 US. What's your take on them?
Yeah, Lululemon, we saw a huge sell-off on the stock, and have picked it up then. I believe we're up like 20% already on the stock. And it is, again, one of the reasons we initially added it to the portfolio in July at 280 and added more again in August at 237. So we do think that Lululemon does remain a standout in the retail space and has a proven ability to deliver top and bottom line growth, even in challenging environments. So, their balanced revenue split between e-commerce and bricks and mortar channels does offer resilient across varying market conditions and long-term strength in their business model. Again, leading up to holiday season, headwinds may present short-term pressures, but Lululemon's long-term growth runway, particularly international markets, does remain compelling. Now they're partnering with a lot of the athletes and Disney products. They're really expanding their business model. So we're waiting and see their forecast results that we see on December 5th to see potential upside from here, but we're still holding the stock right now.
All right, now Shopify, you liked this company and mentioned the drastic revenue increase in 8 years that they had, and a price target of 102 per share, and now it's almost $160 Canadian per share. Where are you on Shopify?
Yeah, I think Shopify's strategic focus really is on expanding its merchant base, right? With the recent additions like Hanes, Reebok, Lionsgate, this does strengthen their position as a leader in the e-commerce solution. So the company's ability really to achieve greater operating leverage is driving meaningful improvements in their free cash flow margins as well, that they increased from 6% to 19%, just over 5 quarters. So we see further growth expected through 2025 through 2026. We're seeing projected low to mid-teen revenue growth. Again, I think that does show us a stable macro environment for the company. Investments also that they've been doing in AI and growing penetration of Shopify's payment enhancement products does further, differentiate the platform and unlocks additional growth opportunities. So we still like Shopify as the long-term hold.
All right, now in general, you had mentioned that 80% of returns come from being in the right sector. What are those sectors looking like for 2025?
Yeah, so we are still bullish on finance and tech, especially the AI. We think this boom is going to continue to run. Maybe some spreading out across the board. Still some magnificent 7 stocks, but also a little bit broader as well. Also energy. So we went from underweight to market weight in our energy exposure, especially with Trump coming into office. We do see some additional upside in the energy space. And also healthcare has had a huge sell-off through 2024. So we do see a rebound in that space. Some valuations are looking pretty attractive to us. So again, we think it's going to be an active management strategy that you're going to need through 2025. I don't think it's going to be a buy and hold. You're going to be shifting in and out of sectors, and that's really where we think our value will add for our clients.
Now, how will potential Trump tariffs impact Canadian stocks and companies?
Yeah, I think Trump's tariff threat, that came out, 25% tax on all goods and services from Canada and Mexico, has definitely reignited conversations about North American trade. So we agree with a lot of analysts on the street right now that this could be a negotiation tactic to kind of get Canada and Mexico to concede on other areas. But I think it is important for investors to remember that any U.S. companies that currently buy Canadian goods would see those costs go up 25% as well. So unless they could find cheaper products or alternatives elsewhere within the U.S. or another country, again, I don't think tariffs would necessarily be a great solution. However, Trump did come out and say that is something that he does want to enforce with his policy. So this definitely would have an impact on the Canadian economy, as the U.S. does support more than 2/3 of our GDP. And 75% of our exports do go to the U.S. So that is a significant amount that we are sending to the U.S. So any Canadian companies that have U.S. customers would definitely see sales drop, likely leading to layoffs and lower spending. So that could ultimately push Canada into a recession. So we do have to be a little bit careful about that. Some of the industries and sectors that I see would have immediate impacts. You're looking at energy for sure. We're the largest supplier of energy to the U.S. Canada might have some negotiating power there to keep that industry safe. But if the U.S. does decide to implement tariffs on Canadian energy, this would reduce revenues and earnings for many Canadian energy companies. So stocks like TC Energy, for example, have a substantial portion of their gas and pipelines across North America. So that would impact them. Another sector, materials. So companies like lumber companies like Canfor, West Fraser, Tech Resources, Nutrien have seen some weakness. Again, metals and materials sector as well. So anything like that would definitely have an impact on Canada. And industrial. So the Canadian automotive industry is highly vulnerable to trade disruptions. So parts, right? Car parts that we send, those would definitely have an impact. Suppliers like Magna are already feeling the pressure. We saw the stocks have lost 5% in one day. And then finally, Canadian food companies. So dairy, Saputo, Maple Leaf Foods are definitely at risk due to dairy and poultry negotiations. So I would say those are kind of the ones that are likely to have the most impact from these tariffs.
All right. And just finally, if we can just talk about bull and bear, if you have 2024, how would you classify it? And as we go into 2025, do you have a classification?
Yeah, I think the market's up double digits, across the board, up over 20%. I think we definitely experience a strong bull for 2024. Our expectations are, again, we continue to remain bullish and optimistic about the U.S. stock market, a little bit cautious on the Canadian stock market in the short term, just with the tariffs, with our Canadian economy, GDP slowing, interest rates cutting a lot faster than the U.S., trying to stimulate growth in Canada. I do think that there is a little bit worry in Canada versus the U.S., so I would be more bullish on the U.S. over Canada and a little bit more bearish on the Canadian economy. Again, I think there's opportunities like energy that can do well in Canada, but overall, I do expect the S&P 500 to outperform the TSX. And I think on that front, we see market fundamentals remaining strong. Earnings continue to stand out and beat expectations. So profitability of these companies continue to lead the stock market higher. Again, we're focused on tech and finance for a while and continue to see opportunities for us in those areas. Trump's pro-business policies are supporting that environment, again, with additional interest rate cuts from both Canada and the U.S. as well. And then I think healthcare is also presenting an attractive, with recent sell-off from Robert F.K. Jr.'s appointment that could bring stocks closer to our target valuations as well. So we like sectors like real estate, energy, materials that can benefit too from lower interest rates and rising commodity prices.
All right. Well, thank you so much, Brianne Gardner, wealth manager and financial advisor with Velocity Investment Partners at Raymond James. It's been a pleasure. Thank you so much for your time.